Hello and welcome to another great Saturday of the show, Your Real Estate Today. I'm Paul Jameson, your host with the Jameson family of companies. That's realty, property management, and property investments. Thank you for spending your Saturday afternoon with us. And we're excited because today, of all days, which is my favorite day, we are going to talk about your home. We're going to talk about real estate and provide information for you that we hope is helpful. I've got Sandy Dickinson on the line with me for the mortgage update. Hey, Sandy, how are you?
Hi, I'm good.
Good. And
Excited.
Brenna Heller is going to be ready in the next segment to join us from the Costner Law Firm. We are going to talk about so many things. You might want to take notes. Just write on your arm. It'd be all right. So, it's all good. Maybe it's a new COVID protection. Could be kind of cool. Writing on your arm. Anyway. All right. Anyway, what did I learn this week? Well, here is an interesting stat. This is Sandy, there's a little trivia. All right. And Brenna,
Okay.
You can make hand signals since we can't hear you through the radio part, but you can make a hand signal. All right. What do you think the median age of a home? You ready for this, TJ? What do you think the median age of a home is in the United States?
What is the United States?
All the homes across the U.S. What is the median
53.
age?
53 years old.
All right, 53. Brenna says 40. All right, what do you say, TJ?
I'm going to go 32.
TJ says 32. The median average for a home in the United States is 39 years. So, Brenna, you were real close on that. 39 years old. Sandy, you missed it by a few.
As usual.
Yeah, you got it right in dog years. But it's really interesting that if you look at across the country, 39 years is the average age of a home right now. So, good time to be a roofer. All right. So, here's another one. I read an article this week. I couldn't wait to share with you all. It is an interesting strategy for selling your home. It's putting your dog in the pictures. Putting your dog in the selling photos for the house. Now, there was some controversy, some back and forth related to putting your dog in the home. Let's share that. So why should you do it? Put your dog in the pictures when selling the home. It said it increases the buyer pool, right? Gets more looks or shares, right? People going, oh, look at this dog, and they share the pictures. It establishes the home as pet friendly, air quotes. It adds an air of fun to the listing. And it creates a unique connection with a buyer. So, how many times have you heard the adage that people will spend more on their dogs than their kids? Mm-hmm.
A lot.
Yeah, right. So, it could be something fun. Now, they say with some qualifications that small dogs do best. Why small dogs in the photos? Large dogs and cat leave the impression that the house is going to be smelly. So, if you're going to try this strategy, which I am not, it would be make sure you rent, own, or use a small dog. All right? So why not do it? Isn't this crazy that people actually write this stuff? And I actually think it's fun to share. All right, why not do it? It keeps the home depersonalized, right? So remember one of the rules of staging. No family photos, no pictures of Aunt Bessie, no things that distract the homeowner from actually seeing the home. Some people never want a pet, and so it's going to be a big turnoff to that segment of the marketplace. Others, like me, who are extremely allergic to cats, I don't die, but I sure don't like it. You have allergy concerns. What's it going to take to get that out of there? Many people are intimidated by pets, especially the large ones. And I think I told a couple of weeks ago the story of the oversized Doberman. So we'll leave that where it is. You can go back to the replays and listen to that. And always there is an assumption of odor with a pet. And when showing, if you do have a pet, the rule of thumb is eliminate all food bowls and other pet items that show you have a pet to the best of your knowledge. Now, I just sold a house that, well, was in excess of $1.4 million. And in the laundry room, they had a pet suite, S-U-I-T-E, suite. Okay, not a suit, suite. And it was positioned, had a little curtain, a little bed, a little area like that. I got more positive comments about that. It wasn't in my pictures, but it was in the house because it was a family house. And don't realize not all houses are discriminative. I'm just using a descriptive. So realize it in that vein that most of them had pets that came through. All right. So in that vein, I have two other things to add, but first we're going to talk to Sandy and get a mortgage update because it might take me longer than a minute. We have 3 minutes, Sandy.
Oh, okay. Well, rates so far are steady. There's still inflation fears, and the question is the Fed going to still continue that as transitory and ignore the inflation, or are they going to start tapering off? So far, so good. So housing starts, new construction are up 3.6%. However, that's lower than expected. So no longer is it about the increase in prices. In fact, the lumber prices have dropped from 1,600 per 1,000 board feet to 1,000. So that was a nice drop. Now it's really about the labor. So they're trying to get the labor. They have a lot of backlog. We really need to have the government stop paying people to stay home so that we can get everybody back to work and get these houses built, because inventory is down like 53%. I don't know how it can go down anymore, but it seems to be going down, and we need more inventory. So I would say rents are up 5.3%. And year over year, 2.3% just in a month. So obviously everybody wants to buy, and hopefully more people will want to sell. But we're loving the market, and I know it's frustrating, but it is a game, and Paul is super great at the game. So rates are steady. You can get really good rates, like in the low threes right now. So that's our mortgage update.
Yeah, that's great. So Sandy, let's talk about a potential strategy. So we've got rents up a little over 2% in the last month, and they're going to keep climbing, right? So investors are loving it right now because their spreadsheets are looking good. And even if you pay a little bit more, you've got an escalating rent environment, right? One of the things that I tell people is while you find the house you're looking for, one of the great things to do is go ahead and rent, but make sure your rental lease has an assumption clause that somebody that is qualified can assume that lease so that they can go when they buy. So you may only have to pay for a month or two of extra rent while they find the right tenant, because vacancy rates are exceptionally low right now. Don't you agree? That's a great strategy if you need a little.
I think that's a great strategy. Plus, it puts more short-term rentals on the market, which people really want. So it could just be a trailing continuation of people renting and then finding places and renting to the next person and finding a place. So I like it.
Yeah, 3-month increments work too. Sandy Dickinson, Cross Country Mortgage, how do they get you?
They call my mobile 704-577-0144.
577-0144. Coming up, we've got Brenna Heller from Costner Law Firm, myself, Paul Jameson. The Show Your Real Estate Today. Saturdays are my favorite day. We'll be right back here on News Talk 1110 99.3 WBT. Welcome back to the Show Your Real Estate Today. It's Paul Jameson, your host. I am the owner of the Jameson family of companies. That's Realty, Property Management, and Property Investments. Here with Brenna Heller from the Costner Law Firm. Welcome back, Brenna.
Thanks, Paul. Excited to be back.
Yeah, good to have you. You know, we got some fun stuff to talk about today.
We do.
I'm going to take Brenna down a rabbit hole of questions. And then also, if we have time, and it never seems like we do, right? We're going to talk about the residential property disclosure statement. It is officially called the State of North Carolina Residential Property and Owners Association Disclosure Statement. But property disclosure statement's close enough. So that's what we're going to talk about if we have time. If not, we'll save it for another special day. But before the break, I shared with you, we talked about dogs and being in the photos in the first segment and why not. Then I got down a rabbit hole of when dogs and insurance don't mix. Interestingly enough, here are the breeds to avoid. All right. And we see this within the rental business all the time. Okay. Here is that one I hear about all the time on an application and I see. First of all, it says pit bulls, which is actually not even a breed. It is a Staffordshire Terrier is a pit bull. Okay. But it's so funny. On an application, I'll see all the time, dog breed, terrier. I say, is it a pit? They go, yeah, it's a pit. Okay, you just say pit. It's fine, even though it's not a breed. So I guess they're being technically half correct, and I'm technically half correct also, even though it's not a breed. All right, here's the other ones. A Doberman Pinscher. Surprise. A Chow. A Rottweiler. And I looked this one up. Presa Canarius. Presa Canarius. You know what a Presa Canarius is?
I'm cheating a little bit.
Oh, come on. That's right. She has the outline. It's a bull mastiff, kind of. A bully. And a German Shepherd. I grew up with German Shepherds. They're pretty cool. All right. They also said there are 5 other breeds that are also unpopular with insurers. Great Danes, Akitas, Alaskan Malamutes, Siberian Huskies. You should read my book, and there's a story about Siberian Huskies in there. And wolf hybrids. Now that's an interesting one. I should have looked into that. A wolf hybrid. Does that mean that they eat less and get better mileage when you go for a walk? What does that mean? There must be wolf in them somewhere. I don't know.
A little domestic, a little wild. A hybrid.
That's right. A little bit of sun. I don't know what that song is, TJ.
Mambo number 5.
Mambo number 5. There we go. Okay.
Good call.
A little bit of chicken fry or something like that, isn't it?
No, that's different.
Is that a different? Well, I just boxed myself into a corner. I'm going to stop. Okay. So here's the catchy line. Ready? Choose an insurer that does not dog discriminate. The good news is for canine lovers, there's no one-size-fits-all approach among insurers to dealing with different breeds. Farmers, Nationwide, and Allstate are among the companies that have been known to ban certain dog breeds from coverage. Other insurers will cover a breed seen as higher risk but charge a higher premium as a result. So, just for fun out there, if you have one of the ones I just named, even the Presa Canarius, you should, if you have Farmers Nationwide or Allstate or any form of insurance, you might want to ask, if your dog bites somebody, is it covered on your insurance? Don't you think, Brenna?
I think that'd be a good question to ask.
Yeah. And I wonder why cats aren't on here.
Those vicious cats. I don't know. They should be, in my opinion.
Yeah, I mean,
A cat scratch is nothing to to shake off. It's not.
there's a friend of mine who got extremely ill, and then we'll move on. But he got extremely ill, and sure enough, he was scratched by a cat. And this is not a joke. He actually got cat scratch fever. There is such a thing as that. It is not just the song. There really is cat scratch fever. And he was very, very ill, and they couldn't figure out what was wrong with him. And it turns out that's what it was. A kitten that a friend had or a relative had scratched him, and they were able to trace it back to that scratch. Isn't that wild?
That's wild.
Yeah.
You taught me something today. I didn't know that was a real thing.
Yes. Well, there we go.
Cat
All right.
scratch
And
fever.
lastly, before we start putting Brenna under the hot light, like where your food is, to keep it warm. I found this morning. So this is hot off the press. What is an attractive nuisance? An attractive nuisance is the name given to any object or structure on the property that can lure people, typically children or elderly adults, into an unsafe or deadly situation. Now, you said you talked about this a lot in law school, huh?
Yeah, you're really taking me back. We talked about it a whole lot in law school and what it means for liability purposes as well. I think it was in our torts class.
Yes. And the number one attractive nuisance?
Pools. Always
That's
pools.
exactly right. Swimming pools are the number one attractive nuisance. Then it is followed by other very popular attractive nuisances that wouldn't attract me, but probably others. Trampolines, jungle gyms, swing sets, dangerous animals, including some dog breeds, decorative fountains, and koi ponds. So that one kind of gave me a little bit of taken back, the koi pond one. But basically they're saying small children or an adult with limited mobility could potentially drown in a koi pond. So it is now considered an attractive nuisance. Okay. Thank goodness a bottle cap is not, because that's where mosquitoes live, according to Marty. So that's a nuisance. And it's not attractive. Okay, what about one of those turtles that they put sand in? What about that? That could be an attractive nuisance, like a giant litter box. That's what I'm thinking.
Yeah, if it was full of quicksand, it would definitely be an attractive.
True statement. True statement. Or that it attracts all the cats in the neighborhood and they scratch people and they get cat scratch
fever. There you go.
Let's just take this all the way to the end.
I think this is the only topic we need today, honestly. We haven't even talked about Texas and all the wild animals there. I mean, they're really putting this one to the test with the kangaroo sightings and the tiger sightings.
Oh, I know. I know. And the wolf hybrids.
Yeah, all those wolf hybrids down there.
That's what I'm thinking. I mean, what other hybrids are there in the animal kingdom? Jeez. Well, Brenna, we're kind of coming up against a hard break at the top of the hour. So let's look at it this way. So we'll give people something to think about at the break. Why would you want someone, and we'll talk about this after the break, why would you want someone to take possession of a home until it is recorded at the courthouse? We talk about that a lot. That's a big deal. You don't turn over the keys until it gets recorded. So Brenna's going to handle that one. After the break, we've got more to talk about. I'm Paul Jameson here with Brenna Heller from the Costner Law Firm, and we're spending Saturday with you on the Show Your Real Estate Today. We'll be right back here on News Talk 1110, 99.3 WBT. Stay right there. Welcome back, friends. The Show Your Real Estate Today. Happy Saturday. So glad to be with you. I'm Paul Jameson, owner of the Jameson family of companies. That's real estate, property management, and property investments. Working with clients, buyers and sellers, investors, and managing homes for them, as well as helping them identify investment property or purchase their primary home or sell it. And boy, if you got a home to sell right now, we would love to talk to you, because there's about 15 days of inventory in this market, and Brenna needs more closings. So, all right, Brenna, so at the break, we said, why would you not want someone to take possession of the home until it is recorded? Handing over the keys at the table, everybody's happy, it's okay. Why not?
Well, the simplest one-word answer is liability, right? If something happens, if things get damaged or somebody gets hurt, whose insurance policy is going to cover it? Presumably the seller has one in place, and hopefully the buyer's is kicking in too. There could potentially be two policies in place at the same time, which you would think means double insurance, but not really. It would be a pretty tough question of who would cover it. So until that deed gets recorded at the county and it's clear who the record owner is of the property and whose insurance policy is going to rule the day, you have some considerations to think about before you hand them over.
So once it's recorded, it's done and will not be undone.
Correct.
Okay. I agree with that philosophy 100%, because here's the other thing. People are like, well, the moving truck is waiting outside and all of that stuff is there, and we want to let the movers in, and we just want to put a few things inside. We won't put the rest in there. Look, I took the hook on that story once or twice. When they're inside, the buyer's inside, they're inside, and they're going to put all of their stuff in there, and for all intents and purposes, they have possession, right? And if there's a hiccup, which has happened, where all of a sudden the lender's funds have not come, and there's a 1-day delay, a 2-day delay, a 3-day delay, 4-day delay, now what? Right?
Yep, that's a tricky one, because once they're in, and you're going to have to go to some pretty good lengths, I'd imagine, to get them out if the closing doesn't actually take place and the deed doesn't actually get recorded into the buyers.
I mean, do you have to evict them?
You wouldn't have to evict them necessarily, because I'm not sure that there'd be a landlord-tenant relationship there to rely upon for an actual
That's
eviction proceeding. But if they refuse to leave, you would likely have to start some sort of legal proceeding to have them removed from the property.
Yeah, which takes forever.
Yes, you would have to go through the courts.
Right. All right, COVID has created a ton of extra forms to protect everyone. Will those eventually go away?
Well, that's a good question. I'm not sure. My gut says that most of them, yes, will. It kind of depends on what kind of form, right? The ones that are limited to the COVID-19 illness itself, those should certainly go away, right? The ones in relation to what happens if a county shuts down before documents get recorded, that should go away as the threat of that happening kind of diminishes as well. I'm not so sure about the ones that we see in lender packages that say that the buyer is attesting that they don't have any actual knowledge that they're getting furloughed or laid off or their hours cut down or would need to go into forbearance on the new loan that they're getting somewhat immediately. Lenders might keep that one around because it could be applicable across the board.
Yeah. I've noticed too, a lot of buyers are having to verify that they're still employed the day of or the day before closing.
Yep, and I think that makes sense. And I wouldn't be surprised if we still saw that happening as we move forward.
Yeah. Well, this is more of a personal question, because as you became an attorney and an officer of the court, per se, you could have chosen many different directions to go related to the law profession. Why real estate?
Well, that is a good question. Real estate for me is something I happened into. I didn't necessarily have a plan to go into real estate out of law school. The job market was tough. I didn't know what I wanted to do. I just knew I wanted a job, and I got into real estate and I fell in love with it immediately. And I fell in love with it because as a lawyer, a lot of law school, as most people know, is, reading books, sitting in a quiet room and taking tests. And I knew that I didn't want that to be my life in practicing law as well. I knew I wanted to have interaction with people. And I think real estate gives you the best hybrid, to use a term we've been using, of both people law and paper law. So you get lots of the transactional side, obviously, because it's transactional work. But since we do closings and we work so closely with our clients, we really do get that person side of it too.
Yeah, it's really interesting because there is, of course, everybody's listening to a show about real estate, right? So the reality is, as we talk about the symbiotic relationship between buying and selling, investing, financing, all the aspects related to a real estate transaction, there's a heavy component of legal terms, legal contracts, legal situations, because there's the human factor that is involved in this, which isn't in every document. And so, to your point, I would assume there are some very boilerplate transactions, and then there's probably some that I personally have given you that are very unique. Or very complex, or have 15 family members, or have a unique nuance of financing, or something that because I deal with a lot of investors, there's a lot of nuances, right?
Absolutely. Yeah. I think that's one of the other perks of this industry, is that we really see something new or unique every day. And that just really does put to the test the term practicing law. You never really 100% conquer it. You practice it during your whole career. And so that's part of it, is just that learning and that growth and kind of adapting to the unique situations that you encounter along the way.
Yeah, that's very cool. Yep. That's kind of the neat thing about our positions, is we get up and no day's ever the same.
That's true.
Yeah. So do you see any industry changes or anything significant, electronic versus signing, or things that you see this year, now that COVID is not the primary thing we're all talking about, that could change your industry or change the industry?
I'm not sure that I see anything really truly happening this year, especially in terms of the electronic kind of closing coming on board. It's coming for sure, right? But we've been told that it's coming for a while now, and until North Carolina first adopts the remote online notarization run, and the lenders get on board with that, we're really not going to see a truly electronic closing. But we've certainly made progress in that field. I think that what we can definitely say I've seen in terms of significant changes is the adaptability, right? Everybody across the board in each little pocket of these transactions has had to learn to be adaptable, whether that means, going to work from home, or buyers having to, see property maybe virtually instead of in person. Everybody has had to be adaptable, and the nature of the industry being what it is right now, which is very, very busy, just goes to prove that everybody was in fact able to adapt and make it work.
Yeah. Yeah. Force adoption. Yeah. Yeah. All right. Well, after the break, we're going to talk about trust accounts. They're very misunderstood. I don't know where the origin of the word trust account came from, but I can guess. Uh, I'll look it up at the break. So we have more to come. Brenna Heller with the Costner Law Firm, myself, Paul Jameson. You're listening to the show, Your Real Estate Today, on a fantastic Saturday. We'll be right back on Newstalk 1110 99.3 WBT. Welcome back to the show, Your Real Estate Today. I'm Paul Jameson, your host. As we navigate through the real estate market, whether you're buying, selling, or investing, I own Jameson Realty, Jameson Property Management, and Jameson Property Investments. And we're excited to share with you. We're with Brenna Heller with the Costner Law Firm, and the time is clicking by quick. So I want to make sure we talk about a few key questions, Brenna. Trust accounts. Share a little bit of the history or what it means. And then, it always used to be said that a trust account check was like a bank check. But I also know personally, because we have trust accounts for our management business, they're exceptionally regulated and exceptionally monitored, and you cannot round up or round down. It is always to the penny.
That's exactly right. So the term trust account really means that the funds are held in trust, right? They are not, although they are being held in an account in the name of a lawyer or a law firm, those funds do not belong to said lawyer or law firm. They are being held in trust by that lawyer for the client to which they belong. So when we have a trust account, that means that those funds do not belong to us. They are the client or somebody else's funds that we hold in trust during the pendency of the transaction. And then for real estate specifically, we are charged with the responsibility of dispersing them out in accordance with the settlement statement and the documents that we have for that particular closing transaction.
Okay. Yeah, because it's something that is when we have a trust account, for example, for security deposits for our renters, that's not our money, that's their money that is in that trust account, as you say. So and so that money is belongs to the renter, and so we actually reconcile those accounts on a monthly basis, and so it's every penny has to be accounted for.
Yeah, and it's another big law school topic too, because it is so important and it really does inform the actual practice of law. I mean, one of the biggest reasons you see attorneys being either reprimanded or even sometimes suspended or disbarred is for trust account mismanagement. And typically what that means is the commingling of funds of both trust or client funds rather, an actual operating account or firm funds that have actually been earned through fees.
Yep, that's exactly right. All right, so I have kind of 3 back-to-back title insurance questions. First of all, can someone update their title insurance, like add a survey or change coverage, if an exception that was an original policy was remedied? Then next, can somebody change to an enhanced policy, or do they need to buy a new policy? And then last, if you have title insurance for a lender and you pay off the loan, does that coverage come to you now as the owner, or do you need to update something?
Great questions. And my answers are, it depends, and no. And I'll elaborate a little bit on that. For the first one, in terms of updating a policy after closing, the answer is it depends, right? It depends on the situation. It depends on what you want updated, and it depends on whether the title insurance company is willing to do that. The title insurance company is not obligated to make any post-policy or post-closing changes. What they are obligated to do is provide you a policy in accordance with their initial title insurance commitment or the title insurance binder. If you want some coverage added after closing, let's take the survey for example, you can certainly reach out and request it. Adding a survey itself doesn't really do much for you as a buyer unless there was an issue on the survey that you are trying to get specific title coverage for, and the title company may issue that if they agree to in some sort of endorsement to the policy or something like that. But just adding a survey wouldn't necessarily change your policy very much. Your policy without a survey is going to have something called kind of a general survey exception, meaning that that policy isn't going to cover any matters that would have shown up on a survey. And by sending your survey in to get that included, it just changes the language of the exception. It doesn't provide you any affirmative coverage. It just says instead of accepting in general to something on a survey, it's now accepting particularly to what showed up on this exact survey you're providing. So again, another reason to get all of these title issues, survey matters handled ahead of time for closing, so that if there is an issue, you can immediately negotiate it or get some extra coverage from the title company before that policy is issued, so that you know that you absolutely have the coverage.
Okay. Then what about changing to an enhanced policy?
So it depends too. I've asked around and talked to some underwriters and title insurance attorneys, and it really depends on the situation. So if you already closed and you got your standard policy and you just heard all the great news about enhanced policies and you want them now, you're going to have to deal with it on a case-by-case basis. And I would suggest you reach out to your title insurance company to discuss it. The things they're going to consider is who owns the property. Is it an individual? Is it an entity? How long has it been since the original policy was issued versus now? Is there a particular title issue that the buyer is now aware of and they want it covered under an enhanced policy, whereas they're not currently covered under a standard policy? Those are the things they're going to take into consideration in determining, one, whether you can switch, and two, if so, how to go about it. I imagine they'd want a title update, so updating the title search to see if anything has been filed in the intervening period of time. And then it would just be a question as to whether the title company would simply charge you the difference in between the standard premium and the enhanced, which would likely be pretty low, or if they're going to charge you for a brand new policy.
Okay. And then last, many people, especially our age, are approaching a time where they pay off their mortgage. And when you bought the house, you have a policy, an owner's policy, and then a policy that goes with the bank, where you're covering them because they have the lion's share or a share of the debt. And you pay off that mortgage. So what happens to your coverages then?
Really nothing. You don't have to do anything extra once you pay off your mortgage other than give yourself a pat on the back and figure out what you're going to do with all your extra money. The owner's policy, the good thing about the owner's policy is you get those typically up to the purchase price amount. So that covers the loan amount and then the difference, of course. The loan policy is just going to cover the loan amount. And once that is paid off, then the lender essentially doesn't have an interest in the property anymore. And so that policy essentially doesn't carry any weight. Just as if you sold the property or conveyed it, your insurance policy wouldn't carry any weight at that time.
Gotcha. All right. And last, in the last 30 seconds or so, what's the biggest mistake a buyer or seller can make at a closing?
I think the biggest mistake a buyer or seller could make, and I actually was talking to one of my associates, Bailey, about this before the show, and I think she made a great point. It's for a buyer or a seller to be a little too anxious maybe to get into the house or get it done, and to overlook or postpone a big issue or question or something unresolved. So if something is wrong on your settlement statement, or something is wrong with the house or with your loan or with your lender or your interest rate, heaven forbid, anything like that, let's deal with it at the closing table. Taking the approach of, I'll close and figure it out later, that's a risky approach to take. So I'd say that's one of the biggest mistakes a party could make.
Yeah, that's great. That's great. Well, if they have an interest in getting in touch with you and need your help, how do they get in touch?
You can call me at 704-900-1134.
That's wonderful. And if you need us at Jameson, you can always reach us at 846-DONE, 846-3663, or on the web at myjamesonhomes.com. If you're a buyer, a seller, investor, or have some properties you'd like to have managed, we would love to help you. We have a suite of convenience now in Gaston County, and so we're excited about that, but always happy to help anyone in the Charlotte market, North and South Carolina, with their real estate needs. You all, thank you, Brenna, for your help today.
Happy to be here. Thanks for having me.
All right. And thank you all for listening. We wish you all a great rest of your Saturday. God bless. We'll talk to you next week. The show, Your Real Estate Today. Take care.